Hello and welcome to Market Domination. I'm Josh Lipton, live from our New York headquarters. There's about 30 minutes to go until the closing bell, and stocks are on track here to snap their two-day losing streak as TSMC's strong outlook boosts AI hopes. And our very own Jared Blickery is standing by with all the headlines. Jared.
Thank you. Chip stocks, we will get to them. Looking strong today. First, let's go to the majors. Dow up 0.5 percentage point, 243 points right there. I'll show you the intraday price action, just short of a record. In fact, no records among the majors here. Here's the NASDAQ up 0.2%, S&P 500 similarly, but the small caps and the mid caps, we are seeing records in the Russell 2000, the S&P 600. That's also the small caps, and then the S&P 400. Also, that is actually the mid caps. And S&P 500 equal weight. We've been tracking this, a record high in that. That's where every stock gets one vote. A little bit different from the regular S&P 500. But I want to move on. We got a lot to cover here. 10-year T-note yield up 2 basis points to 4.16%. 30-year down a basis point, down to 4.79%. But let's check out that sector action. It is another day where we've got some defensiveness looking in the sectors, and these are all large caps. Utilities, that is up 1%. Industrials, that's a cyclical name, that's up 0.8%. But then you got real estate, tech, materials, consumer discretionary, and financials. All of those outperforming. Energy is the worst off of the day. That's down about 1%. You take a look inside the NASDAQ 100, NVIDIA pops out, that's up 2.2%. But let's skip over to those chip stocks. A lot of green and dark green there. There's Taiwan Semi up almost 5%. Not so with the software. So have and have-nots in tech. Do want to get to the Dow Industrials, where we got a couple industrial names, and financials doing well. Here's Goldman Sachs up 4.33%, and let's get the year-to-date on that. Should be good for a record high right there. IBM 2% down in the red there. So is Salesforce, but we're seeing some strength in Boeing. That's up 2%, and Honeywell up 1%. I'm going to close on the transports because the Dow Jones Transportation Average is at a record high, and we're seeing a lot of strength in the airlines. United up 4%, Delta up 3.5%, and American Airlines also up 3.5%. Also adding that Alaska Airlines up 4%, Josh.
All right, thank you, Jared. Well, the US and Taiwan have secured a long sought-after trade deal that has massive implications for the chip industry. Joining now with the details, we got Yahoo Finance tech editor Dan Howley. Dan, what do you make of it?
Yeah, it's obviously a big deal for Taiwan because they have this kind of albatross off their neck, and a big deal for the U.S. getting more of this kind of onshoring when it comes to semiconductors. Obviously, this has been a big push since the Biden administration kind of began pushing that. They had CHIPS Act, and then the Trump administration kind of continuing this idea of getting more semiconductor capacity here in the U.S. So basically, under the deal's terms, there's going to be direct investment from Taiwanese semiconductor and technology companies. That's of $250 billion. It's going to be new and direct investments. Then Taiwan's going to provide credit guarantees of at least $250 billion to help facilitate additional investments from Taiwanese enterprises. The U.S. tariff rate on Taiwanese goods dropping to 15%. The semiconductor capacity import may be up to 2.5 times more that of planned capacity without paying any Section 232 duty. So basically, these companies will be able to import, export more than previously without having to pay any of those duties. We're talking about this $250 billion, TSMC, the largest semiconductor manufacturer in the world, they're going to be a good part of this, right? I mean, they're going to be building fabs in the U.S. then, additional fabs. They already have fabs in the U.S. They're going to be building more, probably doing more R&D here as well. There was tension originally when they were trying to stand up some of the fabs in Arizona between the workers and the Taiwanese workers trying to figure out how to kind of mesh the two different kind of cultures. And it seems to have finally worked out. I wonder, though, how much is going to be dedicated to the likes of NVIDIA versus Apple versus, Qualcomm, all these different companies use TSMC. So I think the next question is, at least for us, what gets built here? What chips? And so the focus is clearly on AI, right? And, the idea has always been kind of reshoring U.S. semiconductor capabilities to ensure that if something pops off between China and Taiwan, the U.S. isn't left without much capacity. And so now this shows that, okay, we'll have the capacity. Still obviously an issue for us if China and Taiwan decide to, come to blows. But I think for us more generally, on a calmer kind of footing, is this going to be Apple stuff? Is this going to be NVIDIA stuff? Who's building here? And I think that'll be an important question.
Do you think, Dan? I mean, you reference this, but this, as you know, there has been this big bipartisan push in Washington. Let's ramp domestic manufacturing of chips. Let's get more independent. When you see headlines like this, you see news like this, how much do you think, okay, this is helping in that effort?
I think there's actually been a lot of help in this effort. Does it mean that we're going to be the largest semiconductor manufacturer in the world? No. We fell off mega hard, right? President Trump says that Taiwan took the business. We just ceded it. We just said, all right, we're good. AMD used to be able to manufacture its own stuff. They broke that arm off. A lot of companies decided to go fabless. And so that just kind of said, okay, well, Taiwan's got this great technology. We'll just scoot over on there, right? The US still has semiconductor manufacturing capabilities, Global Foundries being one of them, which is what was the manufacturing arm of AMD. But, more recently with these pushes, we've seen more investment. Intel obviously investing more, as I said, TSMC, Samsung, these companies are all continuing to make their own investments, but we're not going to be the largest, if that's the goal, for quite some time. And I think really the goal is just to ensure that there's still a steady flow in the US no matter what happens. It's kind of like saying, all right, well, we should be able to build our own, make our own steel here. God forbid we can't access it somewhere else. So it's kind of the same idea. We have oil here, we have chips here. Pat Gelsinger, former Intel CEO, used to say, chips are the new oil. And that's pretty much what it comes down to.
All right, Dan, thank you, sir. Appreciate it. Well, stocks looking to rebound from back-to-back losses as Taiwan Semiconductor's earnings boost AI hopes. How sustainable is this bump in tech stocks? Joining me now on this, we've got Chuck Lieberman, Advisors Capital Markets co-founder and CIO. Chuck, it is good to see you. I actually want to start more broadly, Chuck, because you described the current setup here. You say it is almost ideal. You say, Chuck, almost ideal for equities. Walk me through that. What makes this backdrop so constructive?
Well, to start with, the economy continues to roll despite all of the nervousness about tariffs and about everything else. Economic expansion continues at a very solid pace. Real growth is quite strong. We see that in GDP, and the estimate is over 5%, according to the latest Atlanta Fed estimate. So the economy is doing well. Because the economy is doing well, we see that reflected in corporate earnings. Corporate earnings continue to grow at a pretty rapid clip. The companies are reporting, and they continue to beat estimates. So that's another good news, bit of good news. A third piece is interest rates and inflation. We don't see any uptick in inflation. We see a slight bit lower. The trend is your friend, even if it's not at the Fed's 2% target, but it's not rising. And as a result, interest rates are unlikely to go up. The Fed is under pressure to lower rates. That's another big positive. So there's really not much out there other than the usual turmoil around geopolitics around the world. Other than that, I think everything domestically looks really good.
What about valuations, Chuck? How much of the positives that you're describing has been priced in here?
Well, you really have to look at the companies. I'm not a great fan of looking at the PE multiple for the S&P 500, which is clearly distorted by 7 or 10 companies that have extremely high PEs, but are growing extremely rapidly. The rest of the market trades at a much lower PE, and there are lots and lots of great values there, and the companies are making money, growing their dividends. So I think you have to look at it individual company by company. And we've seen it started to broaden out a bit. So the Mag 7 is not performing as well over the last year as the rest of the market, as the S&P unloved, disliked, ignored S&P 493. So I'm very positive on that part of the market. And even on the Mag 7, some of them are still attractive. You just have to expect very solid growth in their corporate profits.
Let me ask you, Chuck, on this TMC report today, too. Taiwan Semi says they're going to boost CapEx, Chuck, this year to as much as $56 billion. That was more than expected. They see revenue growth of close to 30% in 2026. That's faster than estimates. What did you make of that? What does it suggest to you, Chuck, about that great AI trade and trend, about the great AI bubble debate we've been having?
Well, it's a bubble if it blows up, but right now it's hard to anticipate that that's going to happen anytime in the visible future. You know, what's embedded in a PE multiple of 30 or 35 is the expectation that the company will continue to grow at a rapid rate for at least a few years. If you think that the growth rate, the high growth rate, is going to be extended beyond that, these companies are cheap. And if you think that the growth is going to peter out well before that, then they're expensive. And it's a tough call because it's hard to anticipate just how long they're going to be able to maintain such rapid growth rates. And that's why it's a much tougher call for them. The 493, on the other hand, is a much more straightforward call, and I think there's a lot less risk. So it really comes down to where do you want to invest.
Let's talk about where you want to invest, Chuck, where you see opportunities. Start with the banks here. Citi and Wells Fargo, of course, just reported. You like both. How come?
Well, both of them are undergoing significant corporate restructuring. Citi is selling off all of its foreign activities, and they're realigning their domestic businesses accordingly, and that is taking out a lot of cost. So we're going to see continued improvement in the return on equity, return on assets, and the stock is still cheap. It's trading at around 1x book. So I think there's going to be a significant revaluation upward over the years. This is a company that I own in an income-oriented portfolio, even though the income is under 2%. And it's because I think there's so much upside here. So I'm putting up with a low yield in order to pick up all of that upside. And Wells Fargo has its own issues, same kind of story. They misbehaved. They took advantage of their clients. They got put into the Fed's doghouse. There was an asset cap put on the company, and they had to spend a lot of money on compliance. All of that's now behind them. And so they're growing their asset base again. Their costs of business is declining, is weakening because of all the compliance costs they've had to pay, and that's coming out of the system. So their profitability will improve, and they'll participate with the general improvement in the economy.
Finally, Chuck, another opportunity you call out. This is interesting. Nursing home and assisted living businesses. How come? Explain that to me, Chuck, and then what are some smart ways to play it?
So think about the COVID breakout. Obviously, everything shut down, and nursing homes in particular were really devastated. A lot of patients lost their lives. A lot of kids pulled their parents or grandparents out of these places because they wanted to keep them alive. They couldn't handle it. Occupancy fell, rates fell. Most of them, if not all of them, cut their dividends. Really tough time for the business. Well, that's the past. That was 4 years ago, 5 years ago. Now things are improving. In fact, we've had several quarters in a row in which occupancy has increased, rates are going up, very little new construction because everyone knows that how risky these things were 5 years ago. So we're seeing a dramatic improvement in profitability, and the yields are quite good. You can get 5-6% pretty much across the board, across the sector. And so it's a perfect type of holding for my income-oriented positions. I want to have high income today, but I also want to grow those incomes over time. And these are companies that are going to see rising occupancy, rising rates, and improved profitability going forward.
Chuck, appreciate your time in those picks. Thank you.
Thank you.
Coming up, bank stocks in rally mode here as Wall Street's biggest players deliver strong results thanks to increased trading revenue. We dive into this next on Market Domination. Bank earnings in focus with Goldman and Morgan Stanley delivering positive fourth quarter results. For more, we're bringing it out Mac Sykes, portfolio manager at Gabelli Funds. Mac, it is great to see you. Let's dive right into some of these results, Mac. I'm curious to get your take. Morgan Stanley, net new assets in the wealth business, that was above expectations. Investment banking up 47%. What do you make of that report, Mac?
Oh, it was just tremendous. We saw the EPS beat. I mean, the wealth flows were just extraordinary. I mean, I think consensus are around 85 billion and 120 plus. It just shows the engagement from their clients. Very, very good margins there, and we're at record levels. So this should power fees over the next year, and we know we're coming into a super cycle for issuance, M&A activity, and advisory.
What do you make of the job Ted Pick is doing over there at Morgan Stanley? Just rounding out a 2-year anniversary there as CEO.
Right. So, I mean, he's done a phenomenal job. Obviously the shareholder returns show for it, the capital allocation, and just the improvement in the metrics. I mean, they've already achieved their interim targets. They kept those kind of the same today, but, they're clearly exceeding those. And this is an architecture that was put in place by Jim Gorman, the E-Trade, Eaton Vance, et cetera. So they've built an incredible platform, and Ted's picked up from where Jim left off, and the execution has been terrific.
How about Goldman, Mac? I want your take on that too. So equities trading revenue, all-time Wall Street record of $4.3 billion per Bloomberg. They raised the dividend. What do you think of that one, with the stock now up about 60% here over the last 12 months?
Yeah, well, quite a turnaround from a firm that was, distressed with some of those consumer businesses. They announced the getting rid of Apple, and they've shed those things. So but their trading activity, and this is what they're known for. This is how they execute. This is a great environment for them. And then on the conference call today with the
think we might have lost Mac there. We'll try to get the audio back. Meanwhile, all right, now time for some of today's trending tickers. Taking a look at ASML, Reddit, and Verizon. Yahoo Finance's Brooke DePalma. Join me here to talk about all of it. Let's start with ASML, the company topping $500 billion in market cap as customer TSMC shares an upbeat outlook. So per Bloomberg data, actually, Brooke, this is only the third European company to surpass $500 billion in market value. And of course, this is after TSMC offers that stronger than expected outlook for 26.
Yeah, and ASML is really in this unique position within this market. It provides lithography machines to TSMC, as well as others like Samsung and Intel. And so really it has this niche opportunity in this market as this AI demand really ramps up. And this comes on the back of what we heard from TSMC CEO on the call yesterday afternoon. And when they were asked about where exactly we sit, if there's concern around this AI bubble risk, he sort of stepped back and really assuaged fears and tamped down that fear of this AI bubble risk. He said that he is quite satisfied with the answer around the AI demand, and there's evidence that the AI is really helping business momentum. When you take a look at ASML, their stock is around $1,336 right now. And you think about the run that this company has had over the past year alone, up more than 80%. Many still thinking that there's still more room to run. Wells Fargo even raising their price target on the company.
All right, next up, we got Reddit. Those shares under pressure here as RBC notes a less positive outlook on macro conditions for the company. This is RBC's Brad Erickson. He's a smart guy. Feedback from SMB ad agency checks was challenging, he says. What do you make of it?
Well, I think this is a company that definitely has some momentum behind it, up more than 30%. And it also comes on the heels of, ironically, what we heard earlier this week with Evercore initiating coverage on Reddit stock as well. They actually said that there's more room to run here, that even after a 40% spike in the last 12 months, they think that the momentum could continue. The analyst at Evercore said that there's significant opportunity for Reddit to grow its average revenue per user. That alongside recent ad campaign launches, and also said that there's an opportunity to scale non-ad streams. Also keep in mind, this stock mostly has buy ratings on the street, 21 buys, 12 holds, and only 1 sell on the street. So the optimism seems to be there, but definitely some still on the sidelines.
And lastly, look at Verizon as the company offers credits its customers following a widespread network outage. So it'll issue $20 credits to customers, Brooke, impacted by that service outage on Wednesday, which they say should cover multiple days of service. Verizon pinning this on a software issue.
Josh, I love when a Wall Street story meets a Main Street story. And what we do know is that, yes, Verizon is giving back customers $20, largely unaffected. Over the past 5 days, the stock is down about 3% over the past day. Today, it's trading down about 1.2%. But if we take a look over the past year, this stock really sort of flat, up nearly 3%. We know that the new CEO, Dan Schulman, former PayPal executive, took the helm back in October. And this company really needs to see some momentum here, especially after a not so hot start to the year with this outage.
All right, thank you, Brooke. Appreciate it. Well, 2026 has just begun, and tensions between the Federal Reserve and the Trump White House have already escalated. The Justice Department launching a criminal investigation into Fed Chair Jay Powell, causing concerns about the future of Fed independence. Trump then spent days after criticizing the Fed chair, calling him a real stiff and saying he is, quote, bad in a lot of ways. Still, the president told Reuters in an interview that he has no plans to fire Powell. Federal Reserve correspondent Jennifer Schonberger sat down with Fed Governor Michael Barr to discuss the central bank's independence, rate policy, and more.
Well, I think Chair Powell's statement from last Sunday was clear and direct on this point. It is an assault on the independence of the Fed, as was the earlier assault on Governor Cook. And I think these are just examples of the ways in which the independence of the Fed is being challenged. And I want to assure your listeners that we are acting only for economic reasons. We are acting only according to our congressional mandate. That's to make sure that we have price stability and maximum employment. That's what we've been focused on all along, and that's what we will stay focused on.
Are you worried that the independence of the Federal Reserve is under threat? And will you personally take steps to protect that independence?
As I said, we are acting only for congressionally mandated reasons. We're acting only in order to assure maximum employment and price stability. That's what we have been doing. That's what we will be doing. And the best way to demonstrate that to the American people is to do that.
So we're less than 2 weeks away from your policy meeting. You said you're in a good place with policy right now. If the meeting were tomorrow, would you hold rate steady?
Well, you know, we always take things on a meeting-by-meeting basis. We still have a couple weeks till the meeting. I would say that I think we're in a good place on policy. We can take some time to make a judgment about how the economy evolves, how the data is evolving, what the forecast might look at, the balance of risks. But right now, I think we're in a good place.
Looking farther out towards the end of the year, I mean, I recognize we're in January. A lot of things can change. But do you perceive any adjustments to the policy rate, perhaps later this year, any rate cuts?
Well, I don't think it makes sense to lock in. You know, we really need to know what is the data telling us and how is our forecast evolving, how are the risks evolving. But I think we can take some time really to assess the incoming data because our policy is in a good place. It is balancing both of those risks, I think, quite well. Right now, we're in what most people think of as the wide range of neutral. Mm-hmm. And so it's really important for us to be careful to take our time to get it right.
How restrictive do you think you are right now?
We're really in the range of neutral right now. Mm-hmm. So,
okay.
You know, you can think of estimates around that, but.
Okay. Sort of switching gears, President Trump set to announce a new Fed chair soon. We know that he wants someone who is in favor of lower rates. How do you see the dynamic of a new Fed chair playing out with the rest of the committee? Do you see any shifts to the Fed being able to act independently?
I think that the committee, the FOMC, is set up in such a way that a new incoming chair, like any chair, has to get the trust and confidence of the whole committee in order to make changes in policy. So the chair has to act based on data, has to act based on reasonable forecasts and an assessment of those risks in a way that convinces other members of the committee that moving or not moving is the right thing to do. So the checks and balances that are built into the system will keep the Fed independent and focused on our goals.
We're wrapping up today's Market Domination. Don't go anywhere. We've got you covered with all the action. Following the closing bell, stay tuned for Market Domination Overtime.